Thursday, October 23rd. It was just going over the temperature. My watch says 44. My lock screen on my phone says 46. It's cold in Atlanta. We're getting into soup season, folks. I am much calmer than I was yesterday. I will not, namaste or serenity now for you Seinfeld folks. Serenity now, serenity now. Hopefully everybody enjoyed the banter. It was one of the most highly, somebody said, hey, pro tip, nobody likes you, ranting against some. FYI, those are the most highly rated shows that I do when I get angry. I think most people share those with, hey, listen to this unhinged guy. He's got some good stock picks, but it is what it is. We're going to go over Tesla earnings. We're going to go over Netflix earnings. I will kind of give you my opinion about why the markets actually seem down, because your portfolio may not be exploding like it has been. We will do a comparison of Seeking Alpha and Perplexity, and I did throw it into Sidekick into in TrendSpider. So it's all AI platforms. I'll give you a bonus because a cheat code is subscribing to the newsletter, because I put some stuff out in chat that might be a good thing. We'll go over gold. And are chips now done? Is NVIDIA, AMD, all that stuff, Texas Instruments. Again, earnings. We will go over quantum stocks. What are my quantum picks? Because they're soaring this morning. We will go over alpha picks, because there's an alpha pick that's up 17%, 11%, something like that after earnings. And again, a focus on Tesla earnings and a bonus. Motley Fool, I'll give you a homework assignment, because they put out 5 stocks that you should buy now. But let's go over right now. I'm just going to go over the Qs, okay? Because I want to go over the Qs, because we're at 603. $603 for the Qs. Is that stretched? Is that crashing? Does the market seem like it's going down? Again, I track the NASDAQ, and the Qs is the best way for me to track the NASDAQ. Well, if you look at these 52-week sliders, okay, the 52-week range, again, we've hit all-time highs. So this 613 right there, that would be the all-time high. Well, you're what? 5%, 1%, 2%? I don't know what percentage that is, but you're not 30, 40% away from your all-time highs. If your portfolios are down a significant amount, more than likely it's based on the risk, okay? This particular ETF, we can go down and we can look at the risk score, the beta. I think it gives us beta for this risk. The 24-month beta, 1.25. So it trades a little bit more erratically than the S&P 500. It's not going, that's why I tell folks to have VOO and QQQ if that's all you want to do. But we're not down significantly. It's not, hey, Wall Street's, it's just lower. As investors watch Netflix plunge on earnings, okay? Netflix, yes, it was down 10%. It was down 10%. I repeat, Netflix was down 10%. So if you had your portfolio in Netflix and it was a top 5 position, you're down. Your portfolio is most likely down. Honestly, I don't think the earnings were that bad. They didn't blow it out of the water. The quarter was really good, wasn't spectacular. But it was a Brazilian tax issue that made them miss. Nothing else. The stock has just run way too much. Again, this is why I tell you, have the stock charts up, understand what the trend is. Because we went over since the last earnings, it was just kind of a sideways trade since the last earnings. It wasn't anything huge. We pulled back on the last earnings. The earnings before that was the big one. And again, they're focused on just advertising. It was a good quarter for advertising. So Wall Street's just digesting earnings. We talked about, earlier in the week. It's the economy, it's earnings, and it's the Fed. And Tesla earnings, I'll give you a reason to own Tesla stock. Tesla stock is down, 3 or 4% today? Let's see. Tesla's down 3.68%. 4-hour algorithm got you in at 443. I said before this, I don't trust this particular buy, and I'm not buying. I have identified my range that I like in here. Okay, as it gets down closer to this range, I'll start buying. But I will give you a reason to own the stock later in the show. You don't own this for car deliveries. You don't own this for gross margins right now. You own it for one thing, and that one thing will come up later in the show. I bring up the theme. It's all about earnings, the economy, and the Fed. Any pullback in this market is a chance to buy as long as the earnings continue to grow. They've been good so far. We've had a little bit of a mix, but a lot of these stocks have run up into earnings. So the earnings have to be pristine for them to be good. The economy continues to show strength. So far, the American Airlines, a great example, reported earnings this morning. We saw Delta run up like 5-10%. American Airlines, it's up 6%. Why? The consumer is good. And then you've got the Fed, which Thursday, normally, by the way, we would have a jobs report come out. You're not getting a jobs report today. You want to know why? The government's still shut down. It's still shut down. So the Fed is going to juice the economy, which is already strong, with lowering the rates. And that's going to juice the economy. So is inflation going to pick up? Who knows? But if you don't think that Donald Trump is going to replace Powell with someone who they're going to bring rates down to 2% beginning next year. FYI, Trump is a guy who just bankrupted 6 casinos in his lifetime. And if you believe that, FYI, it was only 3. I'm a douche on the internet. I make shit up all the time. Do your own research. And yeah, it's bad. The house always wins. Why didn't your casinos win? Again, what is going on in the market? Let's take a look at things. So you can say, hey, Wall Street ends lower and it feels like we're down. I've looked at momentum. I went in yesterday and I use the tools that you have. But you look at this and we can see the U.S. equity sectors, okay? Let's go over the last 5 days. What's at the bottom? Momentum. Let's go over the last month. What's at the bottom? Momentum. Let's go up year to date. What's at the top? Momentum. Okay? That's a big deal. So I went into Seeking Alpha, okay? And I asked AI, can you compare the last month of momentum stocks like SPMO, which is an ETF that tracks momentum, versus the broader market? Is it the lack of momentum stock gains that's causing the market to go down? I want to first apologize to everybody out there. I said this Seeking Alpha AI is available to premium members. It's not. Eli actually did a little research and asked Seeking Alpha about this. I should have asked myself, but it's a pro version. I have the pro version. I've told people in the past, I am testing this pro version. You see it over here on the left. Okay. The pro version costs over $2,000. You can use my links on Linktree and you can explore the pro version. Do I think the pro version is worth over $2,000? It depends on what type of budget you have for the tools that you need. Okay? They have quite a few features. The Pro Quant is basically alpha picks, but it's an even weighted portfolio. So essentially, this gets a reweighting every week. So it does seem to outperform some of the alpha pick stuff, but it's a different kind of portfolio. It's a much more actively traded portfolio, and you can take advantage of it like I do with Alpha Picks. The upgrades and downgrades right here, right down there, that is a list of today, which stocks moved from buy to strong buy or strong buy down to buy. Again, it's the quant moves. So if that's a feature you like, again, it just gives you another option. Exclusive coverage, short ideas, I don't do. Top analyst ideas, I've looked at that. Top analyst is kind of interesting. It ranks the analysts. It's kind of interesting. But the AI feature probably is one that, hey, it probably makes sense to buy it. But let's take a look at some of the AIs because, again, Seeking Alpha went in and it judged, and I will post this. I will post this entire response in the newsletter, okay? but it goes over. While momentum stocks have struggled, several trend indicators suggest the broader market remains resilient. Defensive stocks and value stocks are not quite yet outperforming growth, indicating the bull market may still have room to run. The recent market decline appears to be more influenced by momentum reversals across multiple assets rather than fundamental deterioration. That is the AI. Again, it doesn't know the future. Nobody's going to tell you the future. And I have this $2,000 a year AI, but I'm going to give you the same prompt in Perplexity. And the explanation market commentary from mid-October suggests that many momentum stocks lost short-term leadership as investors rotated towards value and cyclicals. Again, it's very similar. Since SPMOs weight adapt monthly based on trailing price strength and sharp leadership reversal, for example, AI stocks consolidating after large rallies, causes it to underperform temporarily. In short, yes, the market's pullback this month is linked to cooling momentum names. The S&P's breadth has narrowed, and when high-weighted momentum stocks lose traction, overall index momentum weakens. So, my thesis is right. And what did I do on top of this live? I went in and I asked the same exact thing to TrendSpider's AI. And it comes up with the same conclusion. The pattern is consistent with late cycle market behavior where investors become more selective and rotate from high growth momentum names to more stable value oriented stocks. The market decline appears to be led by a cooling in very stocks that have been driving the market higher, which is a cautionary sign for a long-term investment perspective. So yes, it's a cooling. But are we that far off? Again, pull up QQQ. Is it cooling when you're at 605, 604 in pre-market and your high is 613? Risk reward. You have to get over that 613 to get to an all-time high. And we are trading at an expense. But if the earnings come in well, and they are doing really well right now, if the earnings come in well, then that actual multiple comes down and you can trade up to the multiple again. So earnings are key. They are key. And again, I'm going to give you a bonus here. Okay? I asked Perplexity, can you tell me what sectors have outperformed in the past month and where I should be looking for leadership in the next quarter? Are there seasonal strong stocks or sectors? This is the shit you should be doing yourself. I asked for myself. Again, this podcast is about me. It's not about you. It's about giving you an insight into what I do. And you should be using AI this way. Go and have a conversation with it. And I'm going to give you a bonus kind of hack here. The chat and Substack. You join my newsletter. It is free. I put out a note for everybody yesterday. I put out paid subscriber notes all the time to try and give them a better insight into what I'm doing with the market. I put out that I sold SSRM. I put out some of the alpha pick stuff that I've been doing, some of the moves that I've been making, that I've been trimming here in stocks this past week. I put out a note yesterday about a few things. I was getting alerts from TrendSpider. Again, TrendSpider, it's my charting platform. And I get alerts all the time. You see these entries? This is the 4-hour algorithm. I set up alerts on this. It is my way of trading. I give it to people when they use my link on Linktree. To go back to yesterday's rant, use Linktree, linktr.ee/dailystockpick. It's on the screen. Sign up for any TrendSpider annual plan, and I will send you my 4-hour algorithm. This note in Substack yesterday, the first thing, the September 15th alpha pick stock, it's a gold stock. I just got an alert on the 4-hour algorithm to sell. It was down big. It's a gold stock. It got killed. The good news, even though it was up, huge a few days ago, like 30%, I locked in 10% gain. 4-hour algorithm told me to get out. Again, I just managed to pull it back to the alpha picks holding percentage because I had put so much in to start. I locked in a gain. Number 2, the 10-1 alpha pick. It's a tech stock. I got an alert to sell that one. I took a small loss. It wasn't big. Again, I pulled that one back to the holding position that Alpha Picks tells me to hold. And if you don't know what Alpha Picks is, it's a data-driven portfolio of stocks. You get a stock pick on the 1st, a stock pick on the 15th. I use these stock picks to actually find entries and exits on the 4-hour algorithm. Okay, another one that I brought up before, SSRM. See that little alert right there at 21? That's an alert that I got, but I brought this up to everybody. That $25 was a resistance level. I started trimming on that one. I was in this one big. How'd I find that? Previous all-time high from 2020. I just put a single line across there. Learn technicals. I love using previous all-time highs or even surges like this one and then pullbacks as support and resistance. I love doing that. So in the chat yesterday, I went over these and I pulled them back. Okay? Even with this gain and this loss, I would have paid for years of this subscription. That's how good a 10% gain in that particular one was. Imagine if I had locked in a 30%. And the third thing that I said was I got an alert from DPST. I had made this public. I said, hey, DPST, because of the regional bank issues last week, we've seen this before. This was last year, the year before, where Silicon Valley Bank went bust, and you saw a huge surge in DPST off of that drop. This one went from $80 to $650 during that run in that was COVID. It might have been like this run, this drop back here, March 2023. We saw it run from $37 up to $86. It was super simple. Again, a triple leveraged ETF. And you can see the alert right there is the buy in the 4-hour algorithm. And we got to buy here at 83.91. I said, hey, I want to wait in this chat in Substack. I'm going to wait. Well, why am I waiting? I got an alert. It outperforms, buy and hold. You can see it makes 170% versus 73%. Why am I waiting? Well, it's about the chart. This doesn't have confirmation. It's not over the 9-day. The 9-day is not moving positive. Every moving average other than the 200-day is moving negative. And that 50-day may actually have a death cross, which actually promotes a downward trend. The MACD, perfectly fine. You're 4 points below the oscillator. That would and the RSI is at 41, indicating buyers need to show up. But do they? Do they? I don't see a trend here that tells me that buyers need to show up. So am I willing in this market that, again, is 1 or 2% from all-time highs? Am I willing to take this chance? No. Risk, reward. So that's what I put in the Substack yesterday. Happy Wednesday. I'm being patient. I'm being super, super patient. Now, gold has gotten killed. Steve Kress is literally telling you, hey, nothing's changed in the fundamentals of these companies. He's giving you gold stocks to buy now. Is gold done? I'm not an expert on this space by any means, but I did write about the stocks getting beaten down, and I've sold quite a few over the past few days. Why? The 4-hour algorithm. We can check it, the 4-hour algorithm on GLD. Okay? Doesn't have you out, but it's damn close. I know the formula. It's damn close to getting you out. But did the fundamentals change on gold? No. This, again, nothing's really changed in gold. And he's literally telling you, hey, here's stocks that fundamentally, if gold goes up, continues to go up, that it's a buy the dip situation. And why is it? I'm no expert on this space because I've never owned gold The gold stocks that I own are part of the Alpha Picks portfolio. In fact, I think it's tonight or tomorrow. Let me see. NEM. It's tonight. Newmont Gold Corp, which is one of the leading S&P stocks. They report tonight. But why has gold gone up? Let me just put it to you this way. The Doge scam, the Department of Government Efficiency that was thrown at the American people. Why was it a scam? Because we've increased spending. It was followed by the one big beautiful bill that actually increased spending. They didn't cut spending from Doge. There wasn't any kind of savings from Doge. That was like pulling, 10 cents out of your monthly budget, your monthly, $5,000 budget. So I will tell you this. The Democrats want to extend tax credits. That's why the government's shut down right now for healthcare, which I personally applaud them for, because I am one of those people that uses the marketplace for my healthcare, as do most self-employed people. You may have a W-2 job. You may not care about that, but I do. The Republicans, they want to increase spending in defense. It's clear. That's what the one big beautiful bill did. But they want to cut it in healthcare and social programs like Medicare. This isn't meant to be a partisan divide, but it's clearly both parties' problem. Spending. If you blame one party over the other, you're part of the problem instead of part of being the solution. I will tell you, the solution for me has been over the years. Anybody that's in office for more than 2 terms, I vote out. I don't care which party. I vote them out. I am a huge fan of term limits. These people have been in there too long. They can't come to any conclusion. They're not even talking to each other. And there are people out there like TSA who aren't getting paid. That's sad to me. That is pathetic. And these people should be ashamed of themselves. And again, the amount of spending that's going on, they should be ashamed of themselves. So gold, crypto, that's why I'm in that. It's not a big portion of my portfolio because I don't think that the government should be in these things at all. But gold and Bitcoin are my that's my hedge. And James is telling you gold is the new Bitcoin. He's giving you the roadmap here. And gold, FYI, it's no longer overbought, but it's still under-owned. That's what these analysts are telling you. So if you don't have gold, figure it out. Understand which gold stocks you want. Do some research. Use AI. I'll go into, Motley Fool, his biggest thing at the end of this program. I'm going to give you 5 things that the Motley Fool says to do. One of them is to go and use AI. So if you don't know that space, gold, go and use AI. I'm using Alpha Picks as my source, and Steve Kress and Seeking Alpha. Again, Seeking Alpha Premium, all of those things that I just showed you, you can get a good understanding of gold. Now, China's in the news too, because Trump's going to take, Steve Kress is outlining for you. Here's strong buys for a trade war. And he's outlining the stocks to buy for a trade war. Again, Steve is far more knowledgeable in this than I am. And he guides you through the fundamentals of investing in China. And he gives you the 5 picks. So if you want those 5 picks, go and do it. I personally have been invested in chips. I've been a big one on chips. Texas Instruments reported earnings. They were in a blowout. It dragged down the rest of the chip. Are we done with chips? When are you buying? Again, are you ever getting back into chips? I'm buying chips on a back-tested strategy that works. For instance, NVIDIA. NVIDIA, it got you out here at 180. You can see the levels that I put in here. These are levels that I like to buy at. Okay. Do I use the 4-hour algorithm? Absolutely. Am I getting out here? I'm trimming. The 4-hour algorithm back here in April got you in at 106. Don't you wish you bought at 106? You're at 180 right now. It had a 64% run. No, it doesn't win 100% of the time. It wins 45% of the time, but it keeps you in because your average win is 25% over the last 2 years. Your average loss is 5%. You can see it doesn't win 4% loss, 2% loss, but that 64% loss, it greatly outweighs these. So if you're having trouble finding things, find a strategy. And again, you don't need TrendSpider. Go and find another program and another strategy that works. Maybe it's just buy and hold. Maybe that's it. Okay? But you have to understand what you're buying. And that's where Seeking Alpha Premium comes in. Credo, which is a great stock, went down 6% yesterday. 6%. It's down another 1.4%. I've been buying this one. Let's look at the chart on Credo. Again, I brought this one up. This was brought down by the Texas Instruments as well. And you can see it's just chop. They don't have earnings until December 1st. We will get NVIDIA earnings before those. And Credo most likely will run on that. Look at the MACD on this. Okay, look at the RSI. It can't get out of its own way while it continues to decline. You can see the blue line is the 50-day. That's declining. The red line is the 200-day. Let's go to a weekly and let's look at this. Even though those are declining, look at the MACD on the weekly. You should expect it to go sideways. You shouldn't expect this one to go to 200. What's Credo's Wall Street, even though they're saying strong buy? Their average price target is 160. They have chased this one up. See that little the orange line? That's the price. Or I'm sorry, that's the price target. The blue line is the actual price. As this goes up, the monkeys start increasing their price. They have to. The market is giving it a bigger valuation. Why? Well, its growth is phenomenal. And it's growing into its valuation because 6 months ago it was a D. Then it was an F 3 months ago, but it's back to a D minus. Profitability went from a D plus to a B minus. Your momentum went from a B to an A. And you can see momentum. It's done really 1 year, 245%. This was picked as the top stock back in November. So a 9-month performance, you're up 60%. Did you need the 4-hour algorithm to be up 60%? No, you needed Seeking Alpha Premium because Steve Kress basically told you, hey, this is a stock that fundamentally we think should continue to grow. Now I'm going to give you quantum stocks. They're soaring today. They're soaring because, again, there's rumors that the Trump administration might be taking ownership of some of these with investments. $10 million per piece is the rumor. So all of these stocks may get $10 million, but they'd have to give ownership of a certain percentage of the company to the U.S. government. None of these companies are actually making money. Okay, IONQ. In fact, what is it? There's one. I forget. Is it? I forget which one. But there's one that has absolutely no revenue. But again, do I own these? No. Want to know my quantum bets? It's Alphabet. And we just had this news 2 days ago. Or yesterday. Alphabet CEO says quantum chip have achieved first ever verifiable quantum advantage. Google has revenues. Google is a good stock. Google is a quality stock. It's not a YOLO where they're going to grow into quantum computing being the 10% driver. No, Google won't be doing that. Okay, Google will pop every now and then. 4-hour algorithm had you in here at 247. 4-hour algorithm doesn't make what buy and hold does. So you can get in and out if you like. Your average win is 9%. Your average loss is 2%. But it protects you from the downside. Again, if you're afraid of the downside, the 4-hour algorithm is not just about, oh my God, I'm going to make gains. Remember, the 4-hour algorithm for me was built around COVID. I want to know when I should be out of stocks. And if I see a drastic decline or a drastic increase in the price of stocks, I look to get out. So it's not just about buying. And Google and Microsoft are the two quantum picks that I have. Big gets bigger. That's my thing. So let's talk about alpha picks. Because again, we go over alpha picks all the time, and I usually give you at least one in an episode because the portfolio has done me so well. Let's talk about one of the alpha picks. It's up 10% in pre-market. It's Lending Club. They just blew away earnings. I brought this up maybe last week. Let's look, because I know I brought this up right here on October 8th. I said, hey, that $15 looks like a pretty juicy buy. Look, because what do you have? You're right around the 200-day. You had this golden cross. This looks like a pullback and then a boost if they can beat earnings. Well, they did. In pre-market, you're at 1833. Now let's just look. What would 1833 be in just a few days? Let's go to 1833. That would be around a 20% gain in what, 14 days? In a stock that is a quality stock. Is it a great stock? No, it's a hold. But this is one where the alpha picks had actually picked it at the top. And you can see 1875 was the high. What does Wall Street think that it's worth? They think it's worth $19, 15% upside. So again, the quant doesn't love this one, but you can analyze it with AI right here. This was just created 1022 yesterday at 10:31 p.m. after the earnings. So you can read all about the positives, the concerns. You can read all about the quant scores specifically on this stock. You can go over the background. SoFi, Upstart, Prosper are the competitors. Again, this gives you such a good look. And this isn't Alpha Picks. This is Seeking Alpha Premium. That's why I like the bundle, because I can research these stocks. I can get the picks from Alpha Picks, and then I can fully research them. And if I don't want to invest in Lending Club, because I look at this and I say, you know what? I actually like SoFi better. SoFi, I think, has a better pump to 30 than Lending Tree to 20. And that's just pure preference. You know, again, I like doing that type of research. So let's talk about earnings, because I brought up Tesla earnings. They warned of near-term uncertainty ahead of acceleration of AI software and fleet-based profits. Again, this is the same thing. Why do you own the Tesla? Okay. I just want to, again, I own a small portion of this, but I own a large portion of XLY, which is 40% of that ETF is made up of Tesla and Amazon, which are the two I love. So I like to, a little bit of less risk. But why do you own Tesla? Is it based on the 4-hour algorithm, which actually beats buy and hold? Is it because you like Elon Musk? Is it because you have the car and you like it? No. You buy this stock based on Elon's pay package. Okay. This is the number one reason to buy and hold this stock. Elon's pay package, which most likely will get approved, it's tied to stock performance. He did this before, and the pay package was actually shot down by the courts in Delaware. But he did this once. Okay, if you just pull this back, see this rise from 2019 all the way up to 2021. See that? That's what Elon did. I bought my Model 3 back here, and it didn't make sense for me to buy this stock. Did I buy it and trade it during 2019? You bet I did. Did I hold on to it? No. I'd be far richer today if I just held on to this one. So my theory to you, why am I holding XLY? Well, it's been an underperformer. If you look at this and we go to market data and we just go year to date, where's XLY? XLY is here down at the bottom. Year to date, it's only up 5%. The S&P is up 13%. The NASDAQ is up 18%. This XLY is only up 5%. And Tesla warns of this. But why do I hold on to this? Because again, I want to be exposed to Tesla. And the reason I own Tesla is not because of operating margin. It's not because of the car deliveries. It's because Elon's pay package is tied to stock performance. He just bought $1 billion worth of stock. He's the richest man in the world. Well, I think Larry Ellison might have taken him over. But again, he's one of them. I'm going to follow him. Is it a large portion of my portfolio? No. But it's a good enough portion that I will benefit if I take the risk. And if he fails, he doesn't get paid. If he fails, I don't make money. But again, that's why I like it. So understand why you own stocks. And that leads me to the bonus section right here. Okay, this is Tom Gardner from the Motley Fool. And this is a great video. While I no longer subscribe to Motley Fool, I do think this message hits right now. Yes, the market's expensive. I will summarize this for you, but it is a 5-minute video. Maybe 8-minute video. Do not take 8 minutes out of your time and watch this. I'll put it in the newsletter for you. But the market's expensive. It's overpriced. But unless you think you're Warren Buffett and you are different than 95% of the people who trade in the market and make mistakes and would have been better off just buying the S&P, would have been better off just buying and holding QQQ because they don't outperform the indexes. His message is for you. Stay invested. Put more money into the market consistently. Use AI. Find a second income because AI is disrupting the job market. If you don't think that Amazon is going to continue to beat earnings by cutting costs, and when I say cutting costs, it's not we're going to get cheaper products and sell them to you for more. It is cutting employment using AI. That's it. He also goes over 5 stocks. One of them is an alpha pick that I brought up to you earlier, and he loves. It's LRN. LRN is one that I brought up right here at 145. I said, I've been trading this one, and I've beaten the alpha picks portfolio by trading it. Again, LRN, they picked back here at about 150. I've been trading this one and buying it as it dipped and popped back up. Now it started to fill this gap, and I said, you know what? I do want to enter as it starts to fill this gap again. And so I started entering it. Use the tools that you have to go and look at these stocks. LRN, it's a buy in the quant. It's a buy from Wall Street. It's a buy from Seeking Alpha analysts. But if you don't have Seeking Alpha, go and look at it. He also brings up another alpha pick as well, which has been doing fantastic. I really like his 5 picks. So here's what the homework that you should do. Go and watch this video. It's just him talking. There's no charts in here. Go and look at his 5 picks. Do the research. Use the tools that you have. If you can't find the tools, then use the link tree. You can literally get a free 7-day trial of Seeking Alpha Premium right there. And you can go and look at his picks and say, okay, the quant says this one's a buy. The quant says this one. Go and read the AI analysis of it. Again, you can look at LRN, analyze with AI. So if you don't understand it, go and do that. Even if you just go to Perplexity and put in his picks and understand what he's saying, the tools that you have should fit your investment strategy. Meaning, if you just want VOO and you just want to chill, you don't need tools for that. Maybe you want the 4-hour algorithm for VOO because you don't know when to get in. Well, maybe you need a technical strategy to tell you when to get in because this one almost beats buy and hold, but you could just buy on weakness. Again, you don't want to buy into a market that's going to drop. Oklo is a great example. This has no revenue whatsoever. Meanwhile, it's gotten you in. You can see, where does it buy? It doesn't buy at the top here. It gets you out on some of these drops. It doesn't time things perfectly. But Oklo on the 4-hour algorithm, you make 981% with some safety. There's some safety because your average win is 50%. Your average loss is 7%. So again, use my link, go to TrendSpider, and look at the tools that they have. Find tools that fit your purpose. And if you have any questions, again, Linktree has my email address. Don't just go to the App Store and say, well, I'm just going to Google this because Gary talks about Seeking Alpha. Oh, it doesn't work. Douchebag, that just doesn't work. Understand what I'm trying to tell you is that this podcast is not about you. It's about me. The tools that I use work for me. If they don't work for you, go and find tools that work for you. And you are free to ask me questions. I just had some guy, email me the other day. I said, I've only been listening to you for a week, but I like what you say. I've lost my portfolio 3 different times. I like your strategy better. 3 different times he blew up his portfolio to 0. So if you have any questions, I am here. And again, one of the best tools that is absolutely free is the newsletter. You can get this podcast delivered to your email every day. I will talk to you tomorrow, maybe. I may take tomorrow off, but I'll talk to you next time. See you, bye.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears.